Good morning, folks. Welcome to your daily market snapshot. I'm Subhash Kumar, and here's what you need to know to start your day. First up, the FIs have sold for over 15,243 crores and DIs have bought for 12,913 crores on Thursday. And their net addition in options indicate a negative outlook for short term. Let's look at how the global markets performed overnight. The S&P, Nasdaq, and Dow were all mixed. Dow closed negative 0.44%, S&P was down 0.17%, and Nasdaq closed flat. Crude oil was almost up by 5%, and notice the S&P VIX spiked by almost 8% yesterday. This is possibly attributed towards the ongoing Israel-Iran conflict. Any aggressive move by Israel to target nuclear facilities in Iran will tumble the markets. As we head into the trading day, GIFT Nifty is indicating a gap down of 100 points. Also, INR is back to 84 levels, which is indicating USD outflows. This is another indicator of market health and the sell-off that we had yesterday. So, yesterday's massive sell-off was a clear indication that the foreign portfolio investors they didn't like the FNO restriction news. However, most of the news report indicate that this was due to Israel-Iran conflict. I mean, when the mother market US hasn't been shaken yet, it's highly unlikely that the Indian markets will take that as a reason. Our markets were inflated only with the sentiment and speculation from FNO retail traders. Here's one such example on the level of speculation the markets were going through. We've almost had a similar formula pattern throughout this year. Imagine 99% of the trades in terms of notional value happening only in FNO segment. That's for every 100 rupees traded in the market, 99 rupees was in FNO and the remaining 1% was going into cash market. This was clearly a no-brainer that all hedge funds took advantage of this to inflate the market as per liquidity in FNO. And notice there is hardly a net sell of 2,000 crores by institutions yesterday, and 2,000 crores costed Nifty a fall of 500 points. There's clearly a shift in the trading dynamics by the institutions. We need to view the market differently than we did a week ago to play with the market makers. Right. So in terms of key economic events, today we have India Services PMI at 10:30 a.m. during market hours. And FX reserves data at 5 p.m. That's also Indian data. We have non-farm payrolls, unemployment rate, and average hourly earnings for the United States at 6 p.m. Since the US markets are waiting for a catalyst to take direction, these data points, if not within the expectation, may throttle a sell-off in the US markets, as these metrics are vital for the labor market condition, which is a key indicator for a recession which the Fed is trying to avoid. So market expectation today, we've had the biggest sell-off yesterday. Again, the data indicates a negative opening. The markets are clearly on the path to correction. However, we need to see how far our domestic institutions will hold the market. I won't be surprised to see if Nifty eroded the complete gains it made in the last 3 months in a fortnight. I'm saying this since the FIs are clearly shifting their futures towards shorts, right? In last year, if you noticed, FIs, whenever taken positions in large positions in futures, the markets turn directional and they move the market with a huge momentum. We saw almost 1,000 points in the last 3 months, right? Every month it was moving 1,000 points because the FIs were building longs in futures. So let's see how the markets turn out since we are heading towards result season for the next starting next week. So quote for today, success in trading comes not from predicting the future but from responding to what's happening right now. Okay. So that's it for today. Be sure to check back tomorrow for more quick insights. Don't forget to like, subscribe and hit the notification bell. Happy trading.